Time now for your power check. We still have not had that meager 3% sell-off that Deutsche Bank was talking about. Should we expect it now? What name should we be looking at? We don't know. But Victoria Greene does. She's CIO of G Squared Private Wealth, also a CNBC contributor. 6 months without a 3% sell-off. That explains, I think, why everybody's so nervous.
It is. It kind of feels like it's just like an earthquake or a volcano where the pressure's building and building, and we're not seeing any of these small corrections. I don't think it's that bad. This is just a normal bull market. This type of low volatility tends to happen when we're seeing the run like this. We've seen it in 2016. We saw it in 2020. We see it now coming off of the tariff tantrum. Now, remember, we packed a lot of vol into 3 days in that tariff tantrum there.
Yes.
So maybe we kind of front-loaded the vol. But I also look at this and I say this is just a normal bull market. If you look how bull markets run, I get it's been extremely low volatility. Nobody'd be surprised if some other tweet sends us down 2 to 3%. But to me, this is just normal. I know it feels abnormal, and yeah, maybe we've had a little less downside.
6 months. Normally, sell-offs happen 1 to 2 months. Going back to World War II, that's a pretty long timeline. We haven't had a meaningful sell-off in 6 months. It's noteworthy.
It is. But
does it mean anything? I don't know, but it's noteworthy. Well,
I don't think the sky is falling. I think this is almost a little bit of, if you look at statistics and data hard enough, it'll tell you anything. And so I look at this and say, well, what's the catalyst behind it? What's the reasoning behind it? I think this bull market has 4 really strong legs to stand on. Number 1 is seasonal. Fourth quarter is great. November's the strongest month of the year. You're coming in here with a great setup. Number 2, technicals are very, very strong in the long term. Yes, near term overbought, but general technicals are very strong. 3, fundamentals, earnings growth, driving us forward, driving us faster. And then number 4 is historical. Historic bull markets, you get to this point, usually last 5-6 years. We're 3 years into it, now off the 22 lows. We still have a ways to go. You have a 4-legged stool for this bull market to keep rallying off of.
All right, so speaking of 4-legged stools, you actually have 4 top picks that you brought in. I don't know what it is about the number 4, but let's go. We've been talking a lot about these big regional banks. Yeah. One of them is literally named Regions Financial. We never talk about them.
I know.
Why are you talking about them?
Well, I like them. I think they're great. I love their position geographically. They have above-trend growth. If you look at their growth, their net interest income, if you look at their interest and deposit charges versus their peer, they're just superior. They've got a good growth target. They've got some dry powder set aside. Their loan growth is right where we want them to be. I think they're a little ignored. They're like 11 PE, solid 4% yield. This stock should be talked about. I know regional banks versus the mega caps, the regional banking index, underperform their large peers. Maybe it's a little bit time to shine on the smaller side.
Yeah, if somebody asked me, what's the largest super cap company you guys never talk about? Not by choice, just because they just don't talk. They're super quiet. My answer would probably be Amgen. If not Amgen, it's one of the tops. It's one of your top picks. Amgen is like a quiet giant in biotech.
Huge quiet giant. Great company there. Huge cash flow. And you know me, I love my free cash flow. That's my favorite matrix for a stock of how much cash do you actually generate with your business. Their business is growing. Their pipeline's great. They're in oncology drugs, cancer drugs, rheumatoid arthritis. They've got all of these catalysts going for them. A little bit of some of the headwinds are now fading, right? And if you're trying to balance your portfolio with some of the higher growth names, this to me is a quality core holdings. They've had sustained growth. They have a great runway with their pipeline. I look at this stock and say, you should be talking about Amgen.
What airport did you're from Houston. Where did you fly into? Newark?
LaGuardia.
Oh, you flew into LaGuardia, which is rare on United, because United, I do that.
I have to pay a premium for Newark.
I'm asking for a reason. If you fly into Newark, you know that we have a lot of things called potholes. And I think you might have a few of them on the 610 around Houston. Vulcan Materials is a company that they do a lot of things, but asphalt, concrete, gravel, that's kind of their sweet spot. We're spending billions, or we were, on road reconstruction, VMC. Is that part of your thesis?
Yes, absolutely.
That we got to fix these holes in the roads.
Oh, for the love of God, will somebody please fix potholes? I have a whole list around Houston. If anybody's in Houston's listening,
there are potholes in New York,
100%.
like literally a giraffe could fall into the pothole and you still wouldn't see the giraffe.
No, they hurt to hit. Look, Vulcan Materials, they are the leader in aggregates. That's what builds asphalt, builds concrete, and they're well positioned for all of this expansion. And we do need infrastructure spending. I know there's a little freeze there, but they will get the state and local governments have to keep building their roads. Think about data center infrastructure too. You've got building there. They're also an Alabama company, and what's moving to Alabama that likes to use local contractors? Space Force.